Hi everyone, today let's talk about the inflation data, as well as Elon's new company, then we'll get into the economic factors, then we'll get into the charts, then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So inflation rose by just 0.2%, which was the slowest in quite a while. Year over year, core was at 4.8 and 3% for headline, so everything was much better than expectations. You can see what that looked like, a big step down here for headline, and then core continuing to step down pretty substantially. You like to see it, and markets rallied super aggressively on this information. We kind of thought this was going to happen as the previous read was pretty good, but this is absolutely even better than I expected, and it was a nice catalyst for markets to go higher today. Moving over to Elon and his new company, XAI. This company is supposed to determine basically the meaning of life, and they're going to use AI to do it. This is yet another company for Elon to manage. We'll see if he can continue to do all of the things forever with Tesla, SpaceX, Twitter, and now AI. Tesla has already been working on AI for a while, and I'm sure he'll use some of that property over at XAI, and it'll be interesting to see what the future of this holds. Obviously, AI will be super powerful, and we talked about that in yesterday's video as well, especially from the investor's perspective. And I do think it'll be interesting to see how this fully develops in his vision, and if he can continue to maintain such a high level for all of these companies. Speaking of AI, we can talk about Morgan Stanley's projection for Microsoft. They see them joining the $3 trillion club, which would be about a 25% move higher from here. That would give it a share price of around $415, or just over that $3 trillion number. And this is based on mostly the fact that AI is going to drive a lot of business for Microsoft and improve their earnings per share, as well as margins. We've talked about that before on this channel. AI should allow them to do more things for cheaper, driving up earnings and driving up margins. Moving over to the economic calendar, you can see all those numbers being better than expectations. 10-year note coming back pretty good actually at 3.8. And then looking at tomorrow, we have core and headline PPI at 8:30. I would expect those to come in better than expectations also. Previous read for PPI month over month was actually negative 0.3. Expectation is 0.2. I would like to see it come back closer to the previous read. We'll see how that plays out tomorrow, but based on today's CPI, that should be good. And then looking at Friday, we have inflation expectations from Michigan as well as consumer sentiment. And don't forget, we do have earnings coming on Friday. We'll talk about that more in tomorrow's video. But the big banks are reporting earnings on Friday. Moving over to the Fed interest rate tracker, I just wanted to highlight that we're basically guaranteed to get a hike in July. Looking at September, we're expecting a pause. Looking at November, we're still expecting a pause with a small % chance of another hike in November. December, again, still expecting a pause with a slight chance of a hike. And then once we get all the way out to March here, you can see we're expecting at least one cut after we get the hike in July. And if we did get 2 hikes, I'm sure this would adjust slightly. But right now, the market is not really buying into the fact that we're going to have 2 hikes. And hopefully we get an affirmation of that at the next Fed meeting. Moving over to Max Pain, it's still sitting at 440. Stock market is quite a bit higher at 446. All of those puts that were way out of the market came off, and you can see the amount of options came down quite a bit to below 700,000. Put call ratio back closer to 1. This is the lowest we've seen it in a very long time. Still watching that 442 area. Now we're looking at 450 as the absolute max for the week, but I wouldn't be surprised to see the market fall a little bit into the end of the week. We're right in that area at the top of the puts, and to me that seems like the max for the close this week. And like I said, it wouldn't surprise me if we dip down a little bit further, maybe about 0.5 to 1% into the end of the week. Moving over to the charts, starting off with the S&Ps here on the hour and the 12-hour. You can see that big push on the announcement, pulled back to that level, tested it, rallied into the close. So now we're looking at the range 445.49 up to 448.74. As long as this holds, we'll be bullish. Once we get up to here, we'll start looking for rejection signs. If it holds, you can look for a break. If it breaks down, then we're looking back down to 445.49. Momentum weakening here on the hourly chart, but momentum on the 12-hour looking very bullish. You can see this kind of channel that we're building here. I noticed this bottom from a couple days ago. Now I'm watching this as a potential topping area. Very interesting to watch. Doesn't necessarily mean that it's going to hold, but it's interesting. Overall, everything on the longer time frame is super bullish. Hourly chart showing a little bit of weakness after we had that big move in the morning. Moving over to the NASDAQ here on the hour and the 12-hour, you can see we broke above 372.85. I was watching 371.25, but I wanted to add this level here today. This is the wick from this previous high here in mid-June. Nice little stop you can trade off of here going into tomorrow's session. If it breaks down, you can look to exit and wait for some support a little bit lower. Otherwise, trading off of that level, looking up to 376.45, which is a pretty substantial move from here. Looking at this zone, very similar to the SPY. Overall, making a higher high, taking out this wick, bullish momentum, higher volume. Everything looks good here going into tomorrow's session. Moving over to the Russell and the Dow, no surprise. Russell continued higher through a big wick, pulled back a little bit, but still looking good. Currently, I'm watching 190.73 for a pullback, and then I'm watching right around that 193.50. Those are my triggers, not necessarily my levels. Watching for a push up to 195.15. I do think that's where we're going to get before we see a major pullback. Momentum starting to settle a little bit. RSI definitely overbought, but we have a higher RSI read with higher prices, confirming that price action. Volume has been stepping up over the last 3 days. Again, I think this is going to continue. Dow threw a big wick to that next level, as we expected. Retested 343.23, held that level, rallying into the close. Again, you can trade off this level, pretty good one. Looking for that move up to 343.24 tomorrow. That would be a couple of dollars of upside potential. Still a little bit more consolidative here on the Dow. Did not take out this high from mid-June. Did take out the high from the end of June, but like I said, still consolidating in this zone, but looks bullish going into tomorrow. Moving over to Apple and Tesla. Apple coming off of that wick at 186.81. Hit it just barely. Rallied here today. Looks pretty good. Back above all the EMAs and SMAs. If we get up to 193.69, it looks like we'll probably double top at that level. RSI has pulled back quite dramatically on the 4-hour chart, and even if we get back into this zone, I would expect to get a lower RSI read, set up that divergence, and then pull back here. Moving over to Tesla, we're grinding up on that trend line. We'll see if this materializes. I do still expect something like this. As long as the trend continues to hold here, it's still definitely plausible, but right now we're still grinding on that lower support line. Moving over to Meta and NVDA, some of the top gainers for the mega caps. Meta rallying super aggressively. Can see that play happening. Volume stepping up, super overbought. Looks super clean to the upside. Watching for 321.68. Just a couple of percentage points higher before we hit resistance. NVIDIA right at all-time highs once again. Looking at 447.13. Once we get that break of this all-time high, going back to June 20th. Moving over to staples and discretionary, no change to yesterday's thesis. Staples consolidating, still holding trend, but not breaking higher really. Discretionary, rallying super aggressive, hitting trend resistance. We'll see if we overthrow up to that 174.76 level. Tesla's not really going with this move, which is interesting. I expected Tesla to be the main driver on this next leg, and we're just not seeing that right now. Either way, though, discretionary moving higher, risk is definitely on, volume stepping up, momentum stepping up, and everything looks bullish here. Obviously, at resistance, might see a little bit of pullback, but overall, this trend is definitely intact. Moving over to utilities and gold. Gold was a top performer here today. We saw a nice breakout above that 180 level. This is still a downtrend, and we're still looking at that 55 EMA at 186.47. But momentum, bullish, RSI, super bullish, way more bullish than we've seen here recently. Very impulsive move, looks good. Utilities also seeing a significant push higher, so we're seeing a little bit of movement into security here with utilities and gold. But when you have tech and the mega caps continuing to rocket higher as well as the Russell, basically we're seeing everything moving higher, and these are just part of that move, but it is something to keep in mind. Moving over to breadth here on the 50 and 200-day averages, you can see gap up and rally here. On the 50-day average, you can see we're getting very close to that peak level. Every time we get into this zone, that is basically the top of the rally. So 92.25 here on the 50-day average. We might have another day or two before we get into that zone. 200-day average hitting trend resistance. Not at a key level, certainly could come up here to this previous high. This has been a fairly interesting level multiple times here throughout history. Doesn't mean that we can't get above it and stay above it for a while. This was 2020 into 2022. That was the peak of the overall markets. But going back here to early February, you can see we haven't gotten into that level for a while. And if we do get into there, you do have to consider that. Like I said, I think this peak here for the 50-day average at 92.25 will be a very good indicator that we've kind of topped out on this rally. Moving over to yields, 2-year and 10-year pulling back dramatically on that CPI number. 2-year continues to fall, looking down to 4.5. 10-year broke back below 4. We talked about the auction down at 3.8 or so, and that's good to see. So yields going lower, stocks going higher, meaning we're getting a little bit more risk as yields go lower. Moving over to the dollar on the hour and the 12-hour. You can see the hourly continues to move lower, big move down on CPI. We actually took out the level I was watching, that 101.25 level. Took it out by quite a lot. We're getting very close to that 100 level. Next level for me is down around 98.18. We're below all of these previous consolidation lows. And that's pretty bearish here for me on the dollar. You can see there's not really any major levels before we get back into that zone. Might be able to make an argument for 99.30 or so. But either way, very bearish, and we're below all of the shorter term supports. Moving over to TLT and JNK. JNK rallied super aggressively back up to 92.50. Took out these previous highs, and this is the move that you want to see more bullishness coming into markets. Took out that low, took out the high, and now we're going to see if this is going to get a continuation. We have trend up around 92.75, and then $93 is a level I'm watching going back to the low from this consolidation in January. Either way though, everything looks pretty bullish, above the highly traded zone, momentum, volume, everything looks good to the upside. TLT also finding some legs on that CPI number, momentum looking more bullish, RSI also looking more bullish, and hopefully this finds a little bit more legs and we see yields continuing lower. Moving over to the volatility indices, as you would expect, they both fell through the floor, way below 1490 on the VIX, getting back into this previous zone of consolidation. Could be looking for that 1177 again. Obviously, we need to get below these previous lows, but this looks very bearish, back below all the EMAs and SMAs. Move index also falling into this previous consolidation. Both of these going lower means we should see more bullishness across markets. Moving over to my accounts, I didn't make as much as I should have. I got chopped up a little bit in the mid-session, but I held all my positions going into the end of the day, so I still made money, just not as much as I wanted to. Looking at my positions here on the IWM, I closed all of my covered calls just to save a few dollars on the assignment. I also sold a put here today, which made a little bit of money. I'll be looking for a position on the IWM for tomorrow. I want to see at least a little bit of a pullback so I can get a little bit better entry on some puts or a covered call. Everything looked so bullish that there was basically no credits to be had going 2 days out. Looking at the Qs, I have 2 covered calls, one for 173 tomorrow and 172 for 2 days from now. We'll see how that one plays out. It's in a little bit of a loss right now. It's a $1.89 credit from 172, so max profit is actually 173.83. But like I said, it's 2 days out, so looking at the puts, I have a 371 for tomorrow and 2 days from now, so everything is still bullish, and I am looking for more bullishness going into tomorrow's session. Let me know down in the comment section what you thought of the CPI data or Elon's new company. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.